Today, we are going to be talking to you guys about everything short-term rentals. We have Jamie from AirDNA, who is the Chief Economist.
I've been tracking short-term rentals for the past 10 years, been in the hospitality industry for 15. Large, unique homes or just outperforming everyone. And when I look at the data, you see the properties that are growing demand the most. It's been those properties that are amenitized in a way that makes them a destination. With short-term rentals, like I could raise my rates by 20% tomorrow. I was just like, oh, the art of the possible.
He is here in Atlanta, where I am. So really excited to dig into everything and review everything that you're learning about the 15 million Airbnbs and Verbos that you guys are getting the data from every single day.
Yeah, here in Atlanta. I've been tracking short-term rentals for the past 10 years, been in the hospitality industry for 15. So it's incredible industry that sort of been a part of. Yeah.
Well, we are going to have so much to talk about with all the work that you've done at AirDNA, the trends and things that you're seeing, and there's so many different ways that we can slice up the data and talk about it. So I'm very excited to dig into all that. But before we do, what has your background looked like before being at AirDNA, just so that we could get an understanding of maybe other places that you've worked, what you studied in college, just so that we can kind of have some background on you?
Yeah. So graduated from the University of Georgia, go Dogs. And worked at a law firm, King and Spalding, in finance and accounting. Went there thinking I wanted to be a lawyer, and within 2 weeks realized I didn't want to be a lawyer, but sort of got stuck there for a bit during the financial crisis. So joined in 07, and then stuck around there till 2010. Had a good friend that was working as an economist in the hotel consulting company. He explained his job, and I was like, I want to do that. Like that is something that just sounds incredible to me. They were hiring, and I got a job there and spent 10 years there. The company was called PKF Hospitality Research, but soon after I joined, it was acquired by CBRE. So essentially spent 10 years at CBRE, which the world's largest commercial real estate company, over 100,000 people globally. And I specifically ran hotel research. Anything and everything hotels. And then by the time I left CBRE, I was running forecasting for all commercial real estate in the US. So office, industrial, multifamily, retail, and hotels.
That is super interesting. So you had access to information that just could really set you apart. And at what point were you thinking that this little startup, Airbnb or would turn into what it is today, and that you'd eventually want to go work in this space,
Yeah.
more directly, a little bit more hands-on?
Yeah, so I was hosting on Airbnb like essentially as soon as they launched. Like I was already a host on Couchsurfing back like 2008, pre-Airbnb time. Was always sort of keeping an eye on the Airbnb space. After it started getting a really and more traction, actually became really relevant in my job of forecasting the hotel industry. So wanting to get an understanding of the supply, the demand, what was actually happening in the space, became the first client of AirDNA when they launched in 2015. So spent 5 years working with the AirDNA data as a client, using it specifically to analyze the threat, the opportunity that hotels could see, and then joined them full time in 2020.
I'm curious to get your take on this, because I noticed trends kind of happening on the boots on the ground, the grassroots kind of level, because of the work that I've done. And I've seen over the last 2 or 3 years or so, there's been this kind of emergence of people getting into these like boutique hotels. And so it's kind of this in-between space. It's not big hotels, it's smaller ones. And I think about it, and I don't know a ton about that space. I'm curious to get what your thoughts are on what we're seeing there.
Yeah, it is really interesting to see, especially since I went from hotels to short-term rentals, and then it's a lot of short-term rental operators that are now getting into boutique hotels. And for a lot of them, I think it feels like graduating up to hotels. And I have a short-term rental. I talked with a lot of short-term rental owners, I like, man, it'd be great if there was like all these homes like in one building and I could just operate them without having to drive between them. And like, and I could have maybe someone on site that could just handle all the problems that come up throughout the course of the day and night. And then they, and tongue in cheek, realize that this is a boutique hotel, right? Uh, and that it can and simplify a lot of the operations, but it can also add a whole bunch of complexity of like just professional operations. And you're now competing for deals with and hotel investors, with private equity money, with and these big, large operators. There's now brands that you potentially have to think about flagging your property with. There's commercial operating agreements, commercial insurance, like a lot of these things that you just don't necessarily get into with short-term rentals. But it can be an incredible opportunity for someone that maybe got the hospitality itch with short-term rentals and then wants to sort of elevate it to the next level. And boutique hotels is, I think, a great opportunity if you go about it with a professional lens of this isn't just 10 short-term rentals under one roof. This is a commercial hotel operations, and that I've got to learn that industry and not just try to apply what I've learned with my short-term rentals to hotels.
And what's interesting about that is some people will build them, or sometimes maybe they'll convert them or they'll buy them, but I don't really see real estate investors going into larger hotels, which is pretty interesting. It's just not something that I've seen anyone do. You'll see people get into large scale multifamily or self storage or mobile home parks and get to a couple thousand units. And that's a really common path that we see, especially from a lot of the guests that we've interviewed so far. But people just do not go towards these larger scale hotels. I would say that one of the guests we interviewed about 2 weeks ago, he's got 50 individual short term rentals. We even see more of that where maybe they'll get 20, 30, 40, 50
Mhm.
instead of getting a hotel. And so it seems kind of like there's this pretty big divide between people wanting to do short term rentals or where the hotel space is. It feels like they're kind of different, really different spaces. Would you agree with that?
I would. And boutique hotels, like I would sort of classify them in a few different things. Like there are small motels, and a small motel is not a boutique hotel, right? Small motels maybe and more easily accessible in terms of purchase price and asset values, things like that. But a lot of them, and they're very popular with the Asian American community. A lot of those properties you have and people that operate them are living on site. They are and developing them over time. Um, they typically need a lot of work. There's not a whole lot of cash flow, and a lot of the expenses are done. Are a lot of the labor is done by friends and family, uh, which can make them look attractive on paper. But then when you actually get into all right, if I'm going to hire a manager and then a cleaning staff, and then I've got to put money into the renovation to get it sort of up to a brand standard that I'd want to use. Uh, and it might not be as attractive as it initially looked when you looked at what their operating cash flow was.
Got it. Okay. Yeah, I was kind of curious, so I appreciate you sharing that. Um, when it comes to Airbnb and Verbo, everybody talks about Airbnb. Nobody talks about Verbo. I think that Verbo was around before Airbnb, but for some reason, people talk about Airbnb like it created the short-term rental industry.
Mm-hmm.
What do you think about that? Is that true, or did
Yeah.
Airbnb do it
So
differently?
yeah. So and there's a long history there. Uh, it's so HomeAway was sort of the precursor to Verbo, and HomeAway went about aggregating up a whole bunch of marketing sites that were essentially marketing short-term rentals. And HomeAway and Verbo was one of those companies that they bought up, and then eventually they were acquired by Expedia, and then relaunched it as Verbo. But they took a very different model than Airbnb did. Like they were a pure marketing site. Like you paid maybe $295 a year, and you could put your listing on Verbo on HomeAway, and then any bookings you got through that platform, like you kept all of that money, and the entire transaction, yeah, the entire transaction happened offline. So you were mailing checks, you were mailing security deposits, like it was a very offline business. And what Airbnb did was and come in and say, you know what, like we should bring that transaction online. We should build the trust and the review system all online and make all those listings instantly bookable. So when you think about and what the business that Airbnb has built, like yes, the idea around and selling or marketing homes online existed prior to Airbnb, but they were really the first ones to make and properties instantly bookable and build that inventory around the world. So they really took it to the next level, and then very quickly, and Verbo tried to pivot or has been pivoting towards moving to a transactional business, moving all their inventory online, and instantly bookable in that whole transaction space. So
Got
yeah,
it. Okay.
and it's been a sort of cat and mouse of I'm testing different business ideas, but yeah, HomeAway Verbo was first, but Airbnb really took it to the next level.
So at AirDNA, you guys have all this data so much that real estate investors and homeowners can use. What's the right way for us to start to unpack it?
Yep.
Are there some major categories or the bread and butter of what you guys are really good at? Do we start off talking about the the different markets, or do we start to talk about occupancy rates and what we've been seeing over the last 5 years, where things are trending? Talking about nightly rates, what types of homes kind of punch above their weight?
Yep.
I want to get into all these things. So you could kind of pick the starting point here of, we've got a pretty long menu of the different types of areas that you guys have really useful data to share. And I want to get through a lot of it.
Yeah. Let me start with like how I think about the data structure because I think it gives a nice base for where to go next. So I think about it as like essentially two different databases. One, we've got our property database. So this is database of every single listing around the world and all the attributes about that listing: bed, baths, title, description, the amenities. Like, and this is a database of every short-term rental. Goes back to 2014. So, and we've got I think it's up to like 60 million listings that have been listed on one of these platforms at some point over the past 12 years. Uh, then we've got our database of performance. So this is how often those listings are getting booked. This is what are the rates that those units are getting booked. This is the revenue that these listings are generated. And we track that on a daily basis out into the future and back through history. So for any given listing, and we can see and what is the lead time or how far in advance people are booking it. We can see and combine it with our property database and understand like what are the amenities that drive higher ADRs, what are the markets that have higher occupancies or lower occupancies, what is the seasonality of bookings, so what is peak season, what is off season, what are markets where people only rent during the summer and sort of turn those listings off during the winter, what happens during special events like the World Cup or the Super Bowl or Taylor Swift concerts, and then and sort of bring that back to and then maybe combine it with other data sets so we can look at, and because we have this great rich property database and we know how many listings are available at any given time back through history, we can then see the relationship between, let's say, supply and new supply being added and interest rates. So as interest rates come down and we see a lot of investors come into the space, especially if revenues and occupancies are high, and then as revenues come down, as interest rates go up, as in environment we've seen in the past couple of years, we've seen new supply growth really decrease. So I sort of sit in my job at trying to explain the trends that we see in the data, help investors sort of understand how they can leverage the data to make better decisions, and then ultimately uh, make the data and useful for all the different people sort of looking at it, because we probably have 10 or 15 different use cases or types of businesses, industries looking at the data on a daily basis.
It seems like the obsession with short-term rentals and Airbnbs that we had in 2021 and 2022 has kind of disappeared. So I think that it went from everyone being obsessed with it and wanting one to only really the more serious people that are actually committed to it really wanting to pursue it now.
Mhm.
I'm kind of curious, do you feel like do you feel like it's balanced out, or do you think that there kind of was a little bit of a bubble there, but now it's kind of popped and it's behind us? I would imagine that if people were going to struggle with their short-term rentals, it probably would be behind us by this point because it's been a really different market in 23, 24, 25, 26 compared to what we had in 21 and 22. I'm curious if there's kind of any like really high level statistic or trends that you've seen about maybe during the boom you guys saw the peak occupancy rates were here, and
Yeah.
I don't know what the average occupancy rates are like now. I'd be kind of curious, what is the average occupancy rate, and what kind of cities might surprise you that actually are pretty solid?
Yeah. So it was so interesting what happened during the pandemic, and it was really supply driven. So beginning in March 2020, and everything shut down, and we essentially immediately saw 20% of U.S. inventory disappear. So people that had second homes, maybe were renting them as short-term rentals, now wanted to and could work remote and moved into those short-term rentals, took them offline for those properties that were in urban areas. And now no one was traveling, so they converted them to long-term rentals. So it essentially just saw 20% of inventory go poof. Then very quickly, it was like May 2020, we saw demand start to come back. And demand came back really quickly because people were in lockdown. They could then start to travel again. They didn't want to stay in hotels. And short term rentals were like these magical little cocoons that you could stay in your bubble. You could travel, not have to interact with other people. And we just saw demand explode. And we saw demand explode without the supply coming back. And that pushed occupancies to record levels. So pre pandemic industry average was like 55% occupancy. At its peak in 2021, we were getting up to 63, 64, 65% occupancy. So really elevated. And it took until 2022 for supply to really catch back up. So 2021 was this magical year when interest rates were still low, occupancy was at record highs, people were raising their prices by 20% because people were willing to rent out anything. Occupancies were so high that you were booking further in advance to get the unit that you could travel to. And we joked that you could put a tent in your backyard and you'd be able to rent it out because there was just so much demand. Um, then in 2022, we saw 25% supply growth. Like that's the sort of boom I think you were talking about with like everyone wanted to get into short-term rentals, and we absolutely saw it. And that did through 2022, 2023 into 2024 slowly eroded overall occupancies, where we essentially got back down to pre-pandemic averages. And that to me is a healthy market. Like if there's excess profits to be made, and supply is going to come in and sort of erode those excess profits, and that's really what we saw. Interest rates also went up substantially in 2022, and those have remained elevated, which has just made deals harder to pencil, harder to sort of cash flow if you are taking on debt. And so that is the reality that we're in. And so sitting here in 2026, overall industry supply is growing at about 3%. Um, I generally think an equilibrium for the industry is probably a bit higher than 3%, given on how much overall demand actually grows for travel, and that short-term rental demand is still taking back share from hotels as people realize what a great option it is for certain forms of travel. So my baseline is that supply should be growing about 4 or 5% a year to keep up with overall demand. And right now we're growing below that. And I think that's largely because of the sort of interest rate and really high home value that we see that is suppressing investment right now.
It sounds like you don't think that there's an oversupply of short-term rental listings right now.
No, I mean, in most are in just about all mountain and coastal markets, we are still well above pre-pandemic average occupancy. Uh, we are, I say that in that we are not, and most deals are hard to make work, but I would say that's more of a debt and interest rate and home value issue than that there's not enough to demand to support those listings. And then we still see some pain in urban areas. Like it is very tough operating environment in a lot of those markets. Demand has not got back to pre-pandemic levels. We've still not seen international travel recover to the U.S. There's a lot of reasons for that, but broadly, most vacation rental markets I think are still undersupplied in terms of the number of short-term rentals they could support. And we have a big or headwind in a lot of the markets around regulation. So supply is being artificially suppressed, and that and ultimately is good for the operators already in because they see less competition, but not great for new investors that and really guests that and people that could invest, and then more people that could be in coming and staying in those markets.
So, because you know so much information about all of the data, seeing inside behind the scenes at AirDNA, we'll play a little game that'll actually be really insightful for people. We're gonna pretend that effective immediately, you got a raise and your salary is $1 million a year. And over the past 12 months, you were house hacking, you live for free, and for some reason you didn't have to pay any taxes. So you're sitting on $1 million right now.
Yep.
You could buy a vacation rental anywhere in the country. Where are you thinking that you would want to put this money with all the data that you have access to? What are two or three cities that you'd be having to decide between? And then what type of property in those markets would you be like, this is going to thread the needle?
Yeah. So maybe I'll walk you through. Like, I essentially did this a year and a half ago when I bought a property. And I was essentially took the proceed and AirDNA and took a bonus, like, and was like, all right, I'm going to go invest this money in short-term rentals. And so and I'll say this because I think this is a lot of the thought process for a lot of investors, at least first-time investors. There is a mix of I want this to be a good investment, but also like short-term rental investing can be fun. Like this is a property that you could use yourself, and take your friends, take your family, and if the marrying of those two can make it be and way more fun than let's say a storage unit in middle of nowhere, right?
Right. You
Uh,
actually could get some utility out of it.
Right. So when we started looking, we at least initially started with like a 4 hour radius around Atlanta. Like, where could we occasionally go to? And there's a ton of great markets within a 4 hour radius of Atlanta. Like, you can get up to Gatlinburg, you can get down to Savannah, you can get out to Charleston, you can and go Lake Hartwell, Lake Lanier, you can go Blue Ridge, you can go Clayton. There's large number of markets that you could potentially invest in. And then and um and I started thinking about like high level trends that we're seeing in short term rentals that I wanted to invest into. And that one thing that's really clear in the data is that large, unique homes are just outperforming everyone.
Hmm.
And you think about the competition between hotels and short term rentals, and it is intense. And they're competing on price, they're competing on amenities, they're competing on luxury. And time again, when I look at the data, you see the properties that are growing demand the most, that are generating outsized increases in occupancies the past few years. It's been those large, unique properties that are amenitized in a way that makes them a destination, and where they do not compete with a hotel because it's and they're accommodating 15 people, you're getting family reunions, you're getting people that are choosing your property because of the destination. And so I went in with a thought process that I wanted to buy and build one of these properties. And so it took me about 6 months of looking, finding to find a property, and and really put a large swath of areas that we were looking at. Regulation was very key because so many counties in Georgia and North Carolina and down to South Carolina have pretty strict regulations in certain parts, whether it's within the city limits, within certain counties. There can be accommodation limits, number of people you can put in. And so I ended up investing in a 5-bedroom home that sat on 5 acres along a creek that I ended up putting a pickleball court into it,
Oh,
hot
that's so
tub,
interesting.
and then making it a real destination for guests.
This episode is brought to you by Easy Street Capital, the lender built by investors for investors. Whether you're flipping, building a rental portfolio, or executing a ground-up construction project, Easy Street has 3 nationwide loan programs designed to close fast with no surprises. We're talking 24-hour closings, upfront terms, and in-house servicing from start to finish. If you're ready to fund your next deal, go to easystreetcap.com/launch REI to get started, or you can grab the link in the show notes. Most real estate investors I know are overpaying in taxes simply because their CPA is reactive, not proactive. That's why we recommend TrueBooks CPA. They specialize in year-round tax planning for real estate investors, depreciation, cost segregation, entity structuring, and their clients are always surprised by what they were leaving behind. Do yourself a favor and find out what you're missing. Go to the link in the show notes and book a call with them. Yeah, that would be. So that's a totally different type of guest avatar than the kind of person that would be staying at a hotel. And I don't know how I've never thought about this, but you think about apartments and houses where people live and all of the layouts and sizes and bedrooms and bathrooms makes us all different. But with hotels, that is a one size fits all. You can sleep 1 or 2 people in a hotel, like that's it. It's a tight little room, that's all you got. So if you have a short-term rental that's competing with hotels because you have a small condo or something, that's your competition. But if you have a bigger home, you're not competing. So it's all about, is your cost basis reasonable? If you're on the hook for a $6,000 or $7,000 a month mortgage payment, that's going to make things like your shirt might be feeling a little tight. You might be a little nervous about that. I have a friend who actually bought a really expensive um, property they used to Airbnb that was in North Georgia. I think it was around Helen. I think that theirs was around maybe 850 or something, and the
Mhm.
numbers just were not quite working out. So I'm sure there's this ratio of what you can charge per night, conservatively what you think the occupancy rate's going to be. What did you anticipate for your occupancy rate? What did you project?
Yeah, and I'll say I ended up buying near Helen, and there was a neighborhood there, Innsbruck, that had all these properties that on paper looked like they would at least like break even, if not generate a little bit of cash flow. Uh, but for me, there are 150 homes in this neighborhood. Like at the time, there was like 50 of them that were short-term rentals, and it felt like that could go to 150 overnight, and none of them had enough space to really amenitize.
Mm,
So, like in my head, like I did not want to be competing with all those homes in that neighborhood because they're all sort of pulling from the same sort of demand bucket. Like, put me 20 minutes from Helen and give me 5 acres to work with. And where land costs up there is not very much. And so finding a property with the space to work with, potentially even adding a second home on that land if I want to, gives me a whole lot of flexibility to actually compete. So I went in. Home ended up costing me about $700,000. I invested about 100K into it in terms of the pickleball court, the hot tub. I didn't want party groups coming up there. So we really amenitized it towards families. We put in a playground, we put in a game room. We really leaned into the family avatar and not like the bachelorette or bachelor party or like
Mm.
groups. Like we didn't want to deal with that, and also, and there are people nearby. Like, and we wanted to be good neighbors. So that's where and so initially estimated first year revenue about $95,000, ended up being about $100,000 with about, and we ended up using about 3 or 4 weekends. So we definitely took some of the cash flow. We used it during Christmas, which lost us about $5,000 in potential income. So it definitely outperformed what we'd expected it to.
So your Airbnb does about 100K a year in revenue, and then if someone is building or buying that kind of property, what would it cost them? And then if there's splits or fees to the platform for Airbnb or Verbo, what do you think the ROI is kind of looking like for something like this?
Yeah, so debt service on the home was about 50K. I found a great cleaner in the area that's just been incredible, and all 5-star reviews. Like, people love it. Handyman. We spent, just in terms of operations, like on the property, and cleaning, maintaining, about 15K throughout the year. And then we've been lucky with no major capex, no major spend around the property. So overall expenses over and above that, including utilities, things like that, has been about 5-10K. So it's definitely cash flowed. And how I see it is, uh, and with most investments, especially in the hospitality industry, is, I mean, rates go up. Like, what you can charge, like, they usually grow at or above inflation. You get to reprice the unit every day, and
Oh, people don't think
expenses.
about that. You get to reprice the unit every day when it comes to short-term rentals. People don't talk about that. That's a nice little hidden golden nugget of wisdom right there.
Right. So if you're a long-term rental and you and 12-month lease, like, you maybe get to reprice that in every year, and but you're always sort of have that floor on what you first rented that unit for. And with short-term rentals, like, I could raise my rates by 20% tomorrow, and no one that's renting and in the future, it has that sort of anchor of what I used to be renting on. So I actually, and as I was pricing my unit, I had in my head that, like, $1,000 was going to be my ceiling. Like, I wasn't going to charge more than $1,000, and I did that for like the first 3 months. And I was like, well, let me just let the pricing software go crazy. And then over the holidays, I ended up getting like $1,500 a night. I was just like, oh, like, the art of the possible, like on some of these high demand nights, and can really be incredible in
Hmm.
terms of what you can rent. And because the property is so unique, and potential guests are looking at your property and the value it can provide their group, and it's not necessarily comparable to a hotel or even other short-term rentals that don't, like, fit directly or not directly comparable, because no unit's going to have the exact same mix, no unit's going to be the exact same location. So it really gives you the ability to do some creative stuff.
So there's two follow-up questions I have on this. The first one is, how should homeowners and investors be using AirDNA? What are
Mm-hmm.
the metrics that matter most that they should be paying attention to?
Yep.
And then the second one that we'll get to is, I've heard you mention amenities a few times, and I want to hear some examples from you of the amenities that really drive that nightly rate and drive the revenue for investors and homeowners.
Mm-hmm.
But first, yeah, let's go into that.
Yeah. So, and a big one for me when I'm going investing in an area is getting comfortable with, like, the earning tiers. So let's say I'm going into Blue Ridge. So we've got an area in AirDNA called Top Listings. And essentially, you can see every single home in that market and what it's earning, or what it's earned over the past 12 months. And they're like, if you're looking at a 4-bedroom home, so going through and looking, okay, what is the top 10%? What are they earning? And then clicking through some of the listings of, like, okay, this is, let's say it's $150,000 for a 4-bedroom. Like, they have all these amenities, they have these incredible views, like you're getting sort of painting a picture of, like, what that type of property, what to be in the top tier could earn. Then you go to the next tier, let's say the next 20%, and you click around on those properties, and you're like, okay, like, they don't have amazing views, but maybe they're on a river. and they don't have a ton of amenities outside, but they've got some great game rooms inside, and they're earning around $100,000. And then you go to the next tier, and you sort of get a sense, and on down. So then when you start looking at investing, like you're going to be going through and Zillow, Redfin, Homes.com, all these platforms, and you're going to be looking at this home, and you're like, you're already going to have like a mental model of like what that home could probably earn given its view, its proximity, its location, how you might be amenitize that, how many bedrooms it has. So that's a great way to just have a mental filter of like, all right, I need at least this amount of yield. If I'm looking at a home that's $1 million, I need to be able to generate $200,000. And this home is not going to generate $200,000 no matter what I do to it. And so we've tried to, and that's the approach I've always taken in using AirDNA. And then we've tried to automate that in a lot of ways. One, we got rights to MLS data. So we have all the MLS sitting within AirDNA. And then we run every home through our rental calculator called Rentalizer to see what it could earn. So you can just go to a map and we'll sort of have a heat map of every home available for sale and what its estimated gross yield is, which for me, if I'm starting with like, all right, it's got to have above a 15% gross yield for me to even be interested in it. Like, let's set a filter of 10%. So now I'm only looking at those homes that meet that threshold. I can filter to areas. And now at least I narrow the aperture of homes I'm looking at, because it can definitely get overwhelming when you just start looking at a market, looking at a variety of markets. And then you underwrite a few properties, sort of do the detailed comp review, like, okay, are each of these comps actually relevant to that home I'm buying? And then you can start to get a really good sense of like, okay, what's going to make sense? And then, so that's when I had done my sort of 6 months of looking for homes. When I actually found the home that I was ended up buying, like I saw it on Zillow. I was just on the MLS. I ran the numbers, went and toured the home, and within, it was like 48 hours, decided to buy it. Like obviously went through the inspections and all that, but it just been through so many properties. When something actually hit all the buy box, I knew it underwrite, like, and it was easy to just move quick.
That's awesome. And when it comes to amenities, what kind of things stand out to you based on everything that you're seeing of, these are maybe the top 3 or the top 5 things that can really drive your performance on a short-term rental?
Yeah, and it really depends on the market. Some of the big ones are probably obvious. Some are real amenities. Some are just like attributes. So I mentioned view. Like having an incredible view can increase the revenue you can earn by 20 or 30%.
And that doesn't cost you anything.
And
Other than, well, you have to pay for the purchase price, right?
Yeah, it's going to be part of the purchase price. But it is one of those things that is you can't recreate if you don't have it. The other obvious one is a pool. People love to rent a home with a pool.
And so it's worth it though, considering all the risk that could be entailed there. You got to imagine that there's a lot of liability, right? The insurance has got to be insane.
There's a lot of liability. So that's one where it's not always a slam dunk to add a pool. And it's one of those things you really have to analyze, like the additional insurance costs, the cost to put it in, and what additional revenue is going to be. Where it gets me excited, homes with pools, a lot of times, or this wasn't true during COVID, but and maybe more now and maybe more before. Like in certain markets, homes with a pool do not, for single family home buyers, like using it for their own use case, do not value the pool as much as a short-term rental investor might value a pool for the additional ADR that you can actually charge for it. So sometimes there's like an arbitrage there of you're willing to pay more for a property that has a pool than someone that might be using it for their own use case. Hot tubs almost always make sense. Like people love to rent a home with a hot tub. It's some additional expense.
You think the demand is higher for a hot tub or a pool?
In a market like North Georgia, Gatlinburg, it's hot tub.
Yeah.
If you're in Atlanta, If you're in a beach market, like people love pools. Like they have little kids. The kids can't
They
swim
want the
in the
pool and the
ocean.
beach.
They want the pool and the beach. Yeah.
How close do you think short-term rentals have to be to the beach to kind of get that good beach rate? You know, if you're
Yeah.
across the street, like that's not bad. If you're right on the ocean, obviously you're paying for the views and you're on the beach. But there's a lot of properties that are a couple blocks off the beach. There's some listings that I've seen that are almost a mile away that try and say
Beach access.
some
Yeah.
version of beach access, and I'm like, yeah, if you drive there, come on, like,
Yeah.
if I have to drive 5 to 10 minutes to get to the beach, like you're in a suburban neighborhood at that point, you know. So
Yeah. So
what's your rule on that?
that's one where it's fun. Like with AirDNA, you can sort of draw custom comps. So you could do like the on the beach comp, the 2 blocks off the beach comps, the and 4 to 5 blocks, like and
So
then
you can
further.
get really
You can
good specific kind of data like that.
Yeah, you can get really good data and see what the ADR and occupancy impact is. And that's one where for investors in beach markets, like the beachfront properties don't always make sense for investors because that's where someone like high net worth individuals that just want to be beachfront are a lot of times just willing to pay the cost when for an investor it might not be worth it. Like where 1 block off the beach where you're able to say like it is literally and 2 minute walk to where you're on the beach. So, and you put your self in the mind of a guest of like, I've got young kids. A long walk is going to be a disaster. A 1 or 2 minute walk is fine. And if the 1 or 2 minute walk saves me $500 in ADR, like I'm willing to do it. So we can stay a week instead of 4 days. So I've been a big fan of like a block or two off the beach in terms of generating good returns. Cause it's in lake markets and beach markets, a lot of the like really incredible properties that are right on the waterfront can just some like there's no way to make them cash flow a lot of times.
What kind of things are you seeing in the 2026 investor survey that you guys have?
Yeah, and a big thing there is new investors are scared, and with home values, with interest rates, with everything that's happening there, but existing investors, so those that already have 1 or 2 properties, and like what are they doing, like they're investing more. So that's and maybe not surprising in a time of uncertainty. Like, what's going to happen? Are we going to a recession? Are we going like are guests going to keep traveling? Um, that could scare away people, someone that hasn't done this before, where the margins are a bit thinner. And if you're not really confident with your underwriting or your ability to underwrite, maybe you put a bigger risk profile on that investment. Where existing investors, especially if you're going to a market that you've already invested into, like you've just de-risked that new investment significantly, and you're able to go in with a lot more confidence of knowing what an occupancy and ADR you're going to get, knowing the team that you can sort of bring onto that property, things like that. And people are worried. They're like, "Am I going to be able to find a cleaner? Am I going to be able to find a handyman?" Like most people are managing these units themselves. They're doing it remotely, and they've got to feel confident that they can build a team to do it. And still, a lot of people today still use property managers. I'm hiring a team to do it for you, but and with how much margins have compressed, if you're going to take 25% off the top line and pay a property manager, and there's not going to be a whole lot left to actually and have it being a cash flowing asset. If you don't care about it cash flowing, you just want it to be a lifestyle asset, like then and hiring a property manager and having them take care of everything can be a great way to go about it.
Do you have enough data or relevant enough data to give a perspective on if you think that the US is in a recession, was in one, potentially entering into one? Because I would think that travel data is a lot of times discretionary income. It's people going on vacations and things like that. So you would maybe see people trading down or maybe doing shorter stays, or
Mhm.
maybe you would just simply see the occupancy rates fall. I'm really, really curious if you guys see any interesting things there, whether it's 23, 24, 25, 26 this year.
Yeah. So you're right. The travel industry, whether it's hotels and short-term rentals, and demand really is highly correlated with what's going on in the economy. So when people have jobs, they travel. When they don't have jobs, they don't travel. When disposable incomes are growing, they travel more. When they're decreasing, they travel less. So if you are just looking at overall travel demand, I'd say there's no way we've been in a recession the past 3 years, and we're not in a recession now. Uh, and then I'll go back and look at the economic data. Like there's been ups and downs, but I don't think we've been in a recession also the past 3 years. We've come close. We've gotten into periods of low growth, but we've broadly stayed positive in terms of overall economic growth. And I also don't think we're in a recession now. I think we've definitely in a higher risk of recession than just sort of baseline underlying risk. There's a lot of headwinds with what's going on with tariffs, with what's going on the war in Iran and elevated oil prices. Though, and today, and we saw oil prices come down, but they've been super volatile. Um, we had the big beautiful bill last year, which and was and poised to be a big net benefit for consumers in terms of the tax cuts. But then we've now seen that those tax cuts have been essentially eroded because of higher gas prices and the impact that that has on consumers. So overall, I still think the economy is going to stay positive this year, and we're not going to go into recession. But there's always things that could derail that.
Right. We've really seen a huge uptick in the demand for midterm rentals over the last few years in particular. I don't even know if that was a thing 5 years ago or certainly 10 years ago. So, how do you think that midterm rentals play into this? Where, if you think about it, maybe I'm just going to make up numbers here. Maybe your long term rents for a property are $2,000. If it could be Airbnb, maybe it has a market value of 3,500. Obviously, there's variability in that. But midterm rentals, maybe it's 30 days, 60 days, 90 days,
Mhm.
and the rate falls in between, but there's so much less work, you have more stability,
Yep.
you've got that full occupancy, and it's that the hassle to cash flow factor might be pretty favorable for a lot of people. Would love to hear what you think about midterm rentals.
Yeah, no, I'm a huge fan of midterm rentals. We actually just did this year a big study with Furnish Finder, sort of diving into the midterm rental industry. We track it in our data to the extent that those listings are on Airbnb, Vrbo, Booking. And the fun story: the CEO of Jeff Hurst was the CEO of Vrbo for a long time, so he gets the short-term rental industry. He is now trying to bring more credibility to their platform for midterm rentals. And so, how I define midterm rentals is more than 28 days and less than a year. And when we look at midterm rental demand on and for homes that we track, and in the US it's almost 19% of overall nights booked. Like it is an incredibly high percent. When you go back pre-COVID it was like 10%. And
Hmm.
so we seen and still see a massive increase in overall midterm rentals. And it's important to understand where it happens and where it doesn't. And midterm rentals are not in the beach markets. They're not in the mountain markets. Like you're not going to go to Panama City and stay for a month. Um, you are potentially going to have a month long rental in Atlanta if you're moving there, or your home's going under construction, or you're a construction worker working on a project, or an executive and moving to the city and needing temporary housing. Like there's so many like drivers of midterm stays. And it sort of brings me back to my hotel industry days where there's like this layering that happens in a hotel There's group demand gets booked out years in advance. Then there's sort of leisure demand that gets booked out months in advance, and then there's corporate travel that gets booked like in the last week before the stay. And for a short-term rental operator, I see midterm, especially in urban areas, midterm rentals is a great way to like layer in demand of like some incredible month, 2 month, 3 month long bookings, and then filling in with short term stays can be an incredible way to like maximize the revenue in that property and decrease the sort a lot of the wear and tear and um, the hassle of dealing with tenants, whether tenants being there long term and the sort of risk of what the home's going to look like when you get it back, or I end up just having to turn it over in every other day if you've got an urban stay where length of stays are like 2 or 3 days at most.
Got
So
it.
yeah, I love it. It doesn't work in every market. It doesn't work in every neighborhood. But there's some great examples of large operators that have built incredible businesses using midterm stays as a core tenet to drive higher occupancies.
That is super interesting. I just really appreciate hearing your perspective on that part of it because I have seen that growing and it seems like it's probably an area that's underserved, especially in many markets. There's definitely another solid hour of content that we could go through, and we will have you back to go through more of that. I want to get into more of, these are cities and areas you should absolutely be looking at, especially these types of homes and these markets people talk about, but the data says that maybe it's not the best place to be. And there's just so much more for us to go into. We didn't even get to talk about, self-managing versus professional management for some of these as well. So we'll definitely have you back. We've got many more episodes to record in the future, but where can people learn more about you, your work, and connect with you?
Yeah, so I'm very active on LinkedIn. You can find me there, Jamie Lane. We have a blog on AirDNA. It's free. Goes out with our newsletter too, where we sort of update every month what are the latest trends in short-term rentals. So highly suggest you sort of check that out. And then, yeah, I've got a podcast, the STR Data Lab, where a weekly view or interview guests and talk about the trends that happen in short-term rentals.
Awesome. Jamie, thank you so much. We appreciate you being here today.
Yeah, thanks, Vince.
If today's episode was useful, subscribe so you don't miss what's coming. We drop 2 episodes every week. And if you want to go deeper, join thousands of investors getting our free weekly newsletter at newsletter.launchrei.co or check the link in the show notes. See you next time.